The morning of September 15th, 2008. Wall Street froze. A 158-year-old company with over $600 billion in assets vanished overnight. This is the story of how it happened. In 1850, three brothers, immigrants from Germany, opened a small shop in Montgomery, Alabama. Their name? Lehman. Henry, Emmanuel, and Mayor Lehman started by selling groceries and dry goods to cotton farmers. But they quickly realized something. Cotton itself was more valuable than anything on their shelves. So they started trading it. That decision changed everything. Over the next decades, the Lehman Brothers moved to New York. They helped finance the railroads, the steel industry, the early American economy. By the early 20th century, Lehman Brothers was no longer a shop. It was a powerhouse, one of the most respected investment banks on Wall Street. Through the Great Depression, they survived. Through World War II, they survived. Through market crashes, recessions, and financial storms, they always survived. For 158 years, Lehman Brothers stood tall. Nothing seemed capable of bringing them down. But then came the 2000s. The U.S. real estate market was booming. House prices were rising every single year. Banks were giving out mortgages to anyone who asked. People with no income, no job, no assets. It didn't matter. Everyone was getting a loan. And Lehman Brothers jumped in, hard. They started buying up thousands of these mortgages, packaging them into complex financial products called CDOs, collateralized debt obligations, then selling them to investors around the world. The more mortgages they bought, the more money they made. By 2007, Lehman Brothers reported record profits, $6 billion in a single year. Everyone on Wall Street was celebrating. But behind the numbers, something was deeply wrong. Millions of Americans had taken on mortgages they could never afford. When interest rates started rising, they couldn't make their payments. One by one, homeowners began defaulting. House prices started falling. And the complex financial products that Lehman had built their empire on began collapsing in value. By early 2008, it was becoming clear that Lehman Brothers was in serious trouble. The losses were staggering, billions, then tens of billions. In the final weekend of its existence, desperate negotiations took place. Treasury Secretary Henry Paulson, Federal Reserve officials, the heads of every major bank on Wall Street, all gathered in Lower Manhattan trying to find a solution. Could Bank of America buy them? Could Barclays? Would the U.S. government step in? The answer was no. On the morning of September 15th, 2008, Lehman Brothers filed for bankruptcy, the largest bankruptcy in American history. $613 billion in debt. Stock markets crashed. Credit markets froze. What started as a problem in the United States became a global catastrophe. Countries fell into recession. Banks across the world began to collapse like dominoes. The story of Lehman Brothers is a story of greed, of arrogance, and of a system that believed it was untouchable. But it wasn't. The question is never if the next crisis will come. The question is, are we ready for it?